This is Jay Bowman from Forex Trading Eur. I would just like to go through the euro and then also through the sterling if I get some time. So let's just go straight to the monthly on the euro. Now first we have here this 138 level that we need to get through on the monthly to give us our next resistance at 140, but then the ultimate is basically the 143 level, which I would keep in mind because I'm just gave me some confirmation on the weekly where basically this bull flag here, which has broken, has given us the 143 target, but there's many resistances for it to get through before it reaches that target. So the first resistance is at this previous shooting star, which was at the 138.45. Now we do have to get through that, and then obviously the next one is the 140 level. Now interesting enough, this 140 level is really the target of this downwards channel here that's broken out, and that gave me, this was last week, that gave me this 140 target. Now in last week, when it came back quite a bit throughout this day of the 22nd, I did warn, I'll go to that straight away, is that the US dollar, I did warn that of course it had come down on the weekly on a bear flag. I did warn that it could retrace halfway up that candle, which is the old Japanese sort of rule, and they can retrace halfway up the candle before finding resistance and then coming off. So that's what it did do. So therefore I understand that, without knowing too much, it would have caught a lot of people out, especially if they were using the average true range. It would have caught them out. But either way, as long as you know the rules and you can expect things to happen, then you can also avoid them. So that was a great trade, and it's still pretty much on, except what you would have done now is basically just to drag your stop loss, your guaranteed stop loss, to a neutral position, where you have zero risk in the contract. So basically, now out of this flag here, I'll just give you the measurements. We get the 140 level, so that's really what's in play. As long as we get through, the 138 level, and then we steam on through to the 140 level. Now, considering everything going the way that that's been indicated through the US dollar and also the Australian dollar going higher, US dollar going lower, we should get more of a rise. So let's just go to the sterling, and this gives us a little bit of an opposite view. Now with the sterling, I'll just go through it really quickly because I'm running out of time, is that it hit the upwards channel here on the monthly. It looks like it's going to finish, well, pretty much is finished underneath that. So that just shows me that it's respecting it, even though we did have a breakout here of the sort of ascending wedge to the upside. Still respected that monthly downwards channel, and also if I just go to the daily, we did have a ascending wedge break, and the target of that is down to the mid 159 levels, 159.45, just under the 160. So the 160 level is pretty much what you need to pass. That would be definitely a form of support, and that's still 100 pips away. So on the downside, yes, there is some good money to be made on the sterling, but we just have to see how it all unfolds. This is Jay Bowman signing out from forextradingbids.com.